Testing. 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 Yes, sir. Yes, sir. I don't know what that sound like, but we sound like got a little static behind it. Testing. Why can I hear out my right ear? Testing. Yes, sir. Yes, sir. I don't know what. All right, so check it. What I'm gonna do is I'm trying this OBS out for the first time, going live on YouTube, going live on the tube for the first time, just trying it out. I feel like I got a frog in my throat. What I'm gonna do is I'm trying this OBS out for the first time, going live on YouTube, going live on the tube for the first time. So what I'm looking at is just trying to like back test my strategy and just seeing how potentially I could have got active and been more profitable this week within the markets. For the most part, as we had the weekly open right over here, I was looking for shorts from this 1 hour level right here. I do not remember. Yeah, I probably did not catch those shorts simply because, as the title implies, I trade the Asian, and by the time the shorts would have set up, it's during the London session. So, what is the? Let's go all the way through something right there. Okay, well yeah. I didn't really like the Asian session range that I had marked up ideally for Sunday open, the weekly open. But what we can see was price action pulled back, and the way I mark up my Asian session highs and lows is generally in the beginning of the session versus the end, like I mark up the London and the New York sessions. And pretty much that way because I trade Asian sessions, so I'm catching the beginning moves. So I'm looking for potential trade ideas and setups as the session as the Asian session goes on. So these Asian highs and Asian lows get broke, and I'm expecting them to get broken, and that's why I marked them early throughout that Asian session. But as we hit this bar replay and we see where how the analysis from the weekend come to play out, we can see how potentially, if we stuck to the simple analysis that we came with over the weekend, that the market was overall bearish. We were ultimately looking for shorts, and how things could have just played out. As you can see how price action has moved throughout all of this week that just passed. Tonight being Saturday night, Friday night, Friday, Saturday. I don't know what time going slow. I didn't have to work. Yeah, today is now 12 in the morning, Saturday morning. So looking at how price action played out, we just seeing based off our strategy, we basically bump out to the weekly. If it's the end of the month like it is now, go ahead and blank all this. What we do is see where price action is reacting from, see where it was trying to go, see what's going on, causing it to react. And if we look to the left of the weekly chart, we have a zone here. We have a zone here to the left. We see price action is reacting from. So because of the way that looks, I'll hop out to the monthly just for a quick double checking on the monthly. That level does not exist. So we can expect price action to potentially push through that weekly zone soon, because on the monthly zone, it does not exist. So the price action that's going on right now is preparing us to see if we're going to push back bullish, or if we're going to break through that weekly level that we outlined and see if we can come back and retest these lows. Because on the monthly time frame, as you zoom it out, you can even see the trend is bearish. High, low, lower, high, lower, low, lower, high, potentially retest this wick or even push AUD, USD even further. And pretty much, yeah, that's it. So we know price action on the monthly time frame is bearish. We know why it's reacting the way it's reacting on the weekly. Oh man, I ain't coughing up nothing. We just keep making freaking cough noise. So we got that identified weekly reaction zone in the blue box. We got it pretty much analyzed or marked up all the way to where price action currently is now in the market. And then on the daily, you can't really see nothing with the drawings on there, but on the daily, let's hop back out to the weekly with a naked chart real quick so we can see price action is pushing down on the weekly, reacting to where price action reacted from last time. On the daily, we see how that price action looks. We pushed down into a zone and we reacted. Ultimately, on the daily, we did have a great pullback, but we did not really shift any structure. Reading lower highs to lower lows. This is the last lower high that produced a new lower low. Price action pushed up to it, went through it, did a little funky little noodle move, and then it moved back down. One other thing I started to identify on AU as well is that AU, when it's dropping, it just likes to flush. When it's dropping, it just likes to flush, and when it's pulling back or when it's going bullish, it's more corrective. It's more slow pushing up. So as you can see, even when you just throw back, the price action really wants to go bearish, it's going to drop bearish. It's going to move. And when it goes to go bullish, it's more corrective. It's choppy. It's back and forth. Flushing, flushing, flushing. Choppy, choppy, choppy. More pullback. This is more choppy. With this price action right here, this could have been an indicator since you've been flushing back here to push the market down. This choppy price action can say, okay, well, if we don't break this low back over here on the daily time frame, we're potentially going back bullish. And as you can see, we got a choppy, choppy, choppy. We did end up breaking the lows, but ultimately it did still end up pushing back bullish. But just on the daily time frame, pushing to this low area, price action pulled all the way back to the extremes, pushing to that low area again. Now that we are pushing into this weekly reaction level, this daily support, we're looking to see if the move that pulls us back breaks any structure. And as you can see, it has not. And we have a bullish candle on the daily chart getting ready, or it's already closed. So for me, what that tells me is that this retracement on this bearish impulse to the downside potentially could be over or is already over. As you add the analysis back on and you pump down to the 4H, what you can see is That price action push up, pull back, pull back, and then that drop. Just a couple candles, 4 or 5 candles on the daily time frame. Looks like this on the 4-hour time frame. And so what you had was this week on price action, not this week, but looking at this chart analysis here, price action is dropping down. First thing that stands out to me is the high, the low. Price action has pulled back and it has broke a 4-hour initial structure. As you're counting lower lows, lower highs, just like a high time frame, this was a lower low or a lower high that pushed you to the lows. Price action pulled back, closed above, even retested that level and continued to push high, and then price action dipped down and broke between that. That would have been a higher low that pushed into the highs, and now it's pushing bearish. I'm trying to identify something on this chart. Oh, just how the price action is showing from the daily. More impulsive to the downside when it's dropping. Put the analysis back on. So going on with that, we see we were bullish sometime 2 weeks ago. Price action has now broken that higher low that pushes into the highs, and now price action is just flushing to the downside. So this past week that just went by, thought process should have been based off of how price action closed 2 weeks ago. That last week we should have been looking for shorts, prime short and opportunities. So this is what a chart would have looked like on the 4H before any analysis. Price action bearish. We broke structure again down over here. So we're looking for the shorts. So ultimately, potentially looking for a 50% play of this impulse move, or looking to see if we pull all the way back up into here before we get shorts again. Going down to the 1H. Now, as we pull back and we broke below that higher low that was on the 4H time frame, what we see is we have a resistance level right here on the 1H. So potentially we can see if price action pullbacks to this level to take shorts from, or if we're going to pull deep more into that 4-hour level to take shorts from. So this is my thought process going into the week. These are the things I was looking for. These are the things I was identifying. And this is how I thought I was going to get cracking in the market. So we're going to look for and see what really happened. So initially when I came to the charts, I would have had, 4-hour high, 4-hour low marked up, and then I would have hit down to these 1-hour levels, and I would have said, okay, this is where I'm looking to get active from. Now, trading the Asian session, sometimes price action don't reach a zone before I get off the charts, and then it ends up being a night of just watching, which is not bad, but at the same time, it does get boring. So what I have done is come up with a set of rules and ideas to potentially I know this market is bearish, but I'm looking for it to come back to this white zone. So potentially there is a range to potentially buy back into that high of 62 pips on the 1-hour level. I feel like it's something gonna come up, but ain't nothing coming. It's just so dry. But what I'm seeing is okay. Looking at the 1-hour. Let's hit the play button, get a candle. First thing I try to identify was my Asian highs, my Asian lows, but I wouldn't have done that on the 1-hour, done on the 15. What I'm doing is just looking at and seeing how the levels look here. The last lower high on the 1-hour time frame before you made the new lower low. Could come in and identify that, but ultimately it's in the same exact spot of the 4H lower low, so you really don't really need that, but I did draw it on there earlier when I was looking at these charts. And then just kind of drag it out like that. So bust down to the 15. I would have been looking for price action. My first area of confluence to potentially short the market, potential lower high would have been right here. So watching the market go, watch it go, watch it go, watch it go, watch it go. Yeah, I would have just been simply, especially on the market open on that Sunday night, I would have just been letting price play out, especially from 5 o'clock to 6 o'clock. I wouldn't probably touch the charts. And then about 6 o'clock, 6:30, I probably would have started looking at it on the phone. And at 7 o'clock, I'm looking, at the computer, getting everything marked up, getting ready for 7:30, 7:45, 8 o'clock Eastern Standard Time. Because I know price action like to get active during those times. Right here, it's already 6:30. Another thing that I have identified, the way price action was playing out during quarter 1 of this year was not the same way the price action was playing out in quarter number 2, which is the quarter we're in now. And what I was seeing was quarter 1, I was getting Asian highs and Asian lows earlier within the session open, like 6:30, 7 o'clock, 7:30. Quarter two, those Asian highs started to develop around the momentum times, 8 o'clock, 8:30, 9:30, which was used just now getting the high or used just now getting the low. So here lately it's been kind of, back and forth with how we mark up the Asian high and the Asian low. But yeah, this is just how I had it marked from the weekly open. It's already, was that 7:15, and we don't have an Asian high. So like I said, quarter one by 7:15, somewhere in there, we usually would have had an Asian high or Asian low already identified. But these are how things have been reacting since quarter two opened up, and basically how we look for that Asian high or Asian low. We look at the market and just say, okay, well, how does the market open up? Right now, the market opened up very bullishly. So with my psychology, what I'm doing is say is, okay, well, market opened up bullishly. Potentially, we are going to create the Asian high first. Let the market continue bullishly as long as they want. That first bearish candle that you see that prints after this big bullish run, that identifies the Asian high between the 30-minute, the 15-minute, and the 5-minute. So right here, we got the Asian high. Price action potentially closed bearish. So now we know from that Asian high being created, what's going to be created next? The Asian low. So then we look and see how that is created. Now, with the way the rules are set up, you have to kind of flip back in between the 30 and the 15 because potentially you could have said since this candle closed bearish, that marked the high, this candle closed bullish, there's your low. Now, where's your range? Well, if you take that right there, you got probably like a 2 or 3 pip range that you're looking for price action to break out of. Well, that's 17 pips. That's pretty big. Wouldn't have expected that. But if I would have marked this point here as my Asian low, then the setup we would have tried to use to see is, does price action break and retest the Asian high and the Asian low? Does price action, as it makes the high, it pulls back to make the low, does it pull back to 50% of that range and then drop down? So we have a couple different, or I have a couple different setups that I use to get active when this price action is starting to play out throughout the Asian session. So with this being the Asian high and this being the Asian low, now with price action being bearish and I'm expecting it to pull back to this 1 hour level, I'm looking to see a break and retest back into this zone up here. So potentially, with me already identifying the Asian high, and I knew price action had to pull back to create the Asian low, potentially I could have got active from right down here to take a buy back into that level because it's something I'm already expecting, something I'm already, thinking about, something I'm already plotting out. Sorry, I got damn asthma or something. And if I would have took that trade, then potentially you could have been looking at 69, 67 pip take loss. Potentially stops would have been below this New York low from the week before. And potentially that could have been a setup, something like that. I did not take that one overall because I knew the market was bearish and I wanted to wait for those ultimate shorts. So as we hit that play button, I mean, we obviously know it hit up there, but this is where breaking down the charts and having the thought process of how your one pair to move, how you can potentially get in and get active within the market. But so from right up here, like I said, I was looking to take shorts. Price action took and pushed into this level, and what we had was I was watching it. I wasn't at my computer screen, but I took a trade, set up something like this. The biggest thing that made me cautious about this trade or getting into this trade, I didn't catch it from up here. This is why I had the sell limit at. But the biggest thing that had me cautious about this trade was it didn't push into my zone like I needed to see it push into. So I didn't use as big a risk because I felt like this was not necessarily manipulation, but this was just price action pushing and pulling back to push into that zone again and then potentially drop from there. I started watching this during the New York session. And sometimes I typically do execute on a trade during New York session, especially if it's something I lined out during the Asian and now it's just now setting up during New York. So the trade that I actually got in was from right down here. Ooh, something like this. And I had stops like right above here. And then I targeted Let me see. Then we got the call outs over here. Come on, baby. And this all yet again testing. I'm trying to see how this gonna work out testing. So I ain't trying to. But yeah, we had the AU first sale. Did I take a short from right there? I think I did. Ooh, go back. Undo that. I think I did take a short from right there. 15 minutes. Oh, yeah, that's why. I'm looking for price action to short off from there. And then it pulled back on me. Yeah, this one hit full stops, and then that's where the second one went. I'm trying to see where did I push for targets and why. I think I know why. So it's 1 hour. Yeah. With this one, it was out to 1 hour where I saw. I think it was just back into this level because I've seen price action react off such zones before. I think I had it down here for full. If it was going to create a new lower low, but I knew I could potentially get TP1 right down here. Let me see. Yeah, I had it all the way to the downside. So then what I did was have TP1 right there, and price action it started to go in my direction. I did not add all positions. And then right up in here is where I collected some of the profits off of it. But back testing, looking at how I wanted to get active within the market last week. Like I said, from the weekly coming on down. Because of the time it is now, 6:25, June 25th, almost the end of the month, I would naturally check out to the monthly. But during the back testing, we were bearish. We were looking for bearish setups on the lower time frames. This was the level we identified as the high and the low from the 1 hour time frame, and then we were looking at short from that area. We ended up catching a short from the next, I guess you would call this a new lower high now, or you potential new lower high if we broke structure to the downside. This would be a new lower high, but we found an area in the market where price action reacted, came down, created a support, pulled back, and then broke through that support, and then got into the market. So I'm looking for if what I would have been looking for next, or what I was looking for, is continuation to the downside to create new lower lows, new lower highs, to continue the bearish trend. And then what we're gonna do is skip forward all the way back to the agent session where I get active at. What time we at right now? Okay, so this is 8 o'clock, 9 o'clock. Let's take it back to take it back to the 8 o'clock. No, yeah. Take it back to right to the Asian Open. All right, so I closed out the trade right here. What I was looking for, and the main reason why I closed out is because I've gotten in trades during the NY session before, and things that I've seen is price action will push, pull back, and push, and once it starts to consolidate like that, you either gonna get a major pullback back to your entry, or it's just gonna keep consolidating into the next session. So once it came down, and I started to see, just these little choppy little candles, I'm up out of there. So now we would have been, this would have been Monday night's agent session open. So like I said, the same way we got active over here, we let the market open up from that 5 o'clock, 5 to 6 p.m. closing time, and then just let the thing open on up and do what they're gonna do. So right here we open up bullish. We opened up bullish, and we did produce a bearish candle here. But when you bump out to the 30, oh, that candle is there. So potentially that could have been the Asian high. But I don't like that. The way that candle, just a little bearish doji, a little bearish doji candle. Yeah, I had it right the first time. And I don't like it because I know, like I said, between quarter one and quarter two, how price action has been producing since the quarter opens. And like I said, the way this opened, I just knew that this wasn't enough price action being printed on the screen for that to be the Asian high. And then even after that, we didn't continue bearish. So that would have been your low. And then you've just been all chopped up. So that's why it's marked the way it is. Asian high right up there. You got the bearish close, came all the way down. I didn't like this as the Asian low, but I marked it as what it was. So now, price action being bearish, I'm looking for a break and a retest of this Asian low. Otherwise, you pretty much ain't really got no trade because the market is bearish and you're looking for the shorts. Let's see. Now with nah. So at this point, right over here, I'm about ready to get off the charts. So I got from this line all the way over to this line to potentially see this trade set up right here. You ain't got that. What you got is some mumbo jumbo fake out. Potentially, probably could have bit off a short right here. Like would have could have put like got pump fake for a short right here, saying because we created the high, we created the low, we retested the high and we rejected the high. Now we come back to the downside. So I probably could have, jumped into a short right here, but it wouldn't have played out. We didn't close below. So waiting for that setup to actually create. So you got the Asian high, Asian low, that breaking the retest. And then the 50% play didn't play out right here where we pushed high, pushed low, would have pulled back 50% or this push to the low side and then started pushing back bearish. That other setup did not play out either. So pretty much a waiting game, sitting back and down. When this candle here went to open up, I pretty much would have been ready to get off the charts. So I would have missed all the rest of this. So we're going to go ahead and push on through. There wouldn't have been no trades. Probably wouldn't have been looking to take not through New York simply because we are not really creating new lows or new highs, and this right here looks like consolidation. So I would have been moving on to the next Asian session. And we were still within this 1 hour range. So overall, mentally, after taking these few trades right over here, I took a short right over here and got clapped for full stops. I do remember that now too, because we pushed higher and I was looking for it to push back into this level and then go short. Didn't take any profits off. Something like right over here. I know the stops was above here. And then I was targeting the lows. Yeah, got clapped something like this. Right over here. Something like that. Full stops got hit on that. Did not take this buy, so this was missed. Missed this short as well. Did catch this one. Closed off partials right down in here. And then, yeah, price action wasn't doing too much of nothing. So we move forward to that Asian. And now, what day is this? Let's see where we at. 21st. Start off like a small Tuesday, the 21st. Yep. So Tuesday night Asian session. What we've got from the previous price action sessions. Asian session created a range. The London pump faked the high of that Asian high. Pump faked the low. The NY did not break the London's low. Pump faked the Asian high, and now we just still in that same range. So overall, higher time frame, we went back out to the hourly. We pretty much consolidating. We lower high, lower low, potential new lower high, no new lower lows, just back and forth, pretty much barcodes. During this Asian session, we just pretty much sitting back and looking to wait to see which side's going to break out first because we overall bearish, but at the same time, you have no real setup here just yet. So we gonna push on. I wish you could play music on these without getting copyrighted. Cause oh yeah, I missed this trade right here, and I missed it because when I took this trade, I didn't see nothing here, and I was paranoid about taking this trade. What I saw right here was a little trend line going, and then once I saw the trend line break during the New York session, I wanted to short like somewhere right over here, and I didn't. And if you go down to the 5 minute, you can see it even better. Yeah, looking something like this. I had it drew up like this on my phone. Saw it break that trend line, and I was like, you know what? Even though it did break that trend, you got something like a little impulsive move down here, but the rest of it is just real choppy, and I don't really trust it. So I did not get active on those shorts, even though it did play out. I was kicking myself later on because I saw it from the beginning and would have had it from way up here. But so the Asian session, you got the high, you got the low. 30 minute, that's what it looks like, real choppy. This is again another scenario where it's been difficult to mark the Asian high and Asian low, simply because you got the 1 bar push here and then it just drops, pulls back, and then it just drops, pull back, and drop, and just pull back. So potentially, you just let that price action play out. You know, it doesn't look good on the 30. It doesn't even look. It doesn't look any better on the 15. So we pretty much just sitting between this range, just waiting for this breakout. And what we see is price action dips to the bottom side first. I did not. I don't think I took any of these shorts. Let me see, what is this? It's Bitcoin. We have Bitcoin lined up too. I don't know what shorts these were, but caught some more shorts on you. So what day was it? The 23rd. Okay, yeah, that was towards the end of it. That was on Thursday. It was Thursday short. So this is Tuesday we sitting on right now. So yeah, not too much, nothing. Let's go back. It looks like we had a breaking structure I wanted to talk about. Blank all this. So still on the hourly chart, high, low, potential lower high, no new lower low, consolidation, potential new lower high, break of whatever little structure this is, pull back, retest. So we're ultimately looking for this level right here to break to determine if we're gonna go lower or reverse and go back higher. And then we finally get that level to break. It's on the 1 hour chart. Finally get that level to break, that candle closes. Next candle, continuation. So yeah, potentially no trade here during that Asian session. So yeah, we'll just let the price action play out all the way to the next Asian session. But what I would have noticed or paid attention to is what price action did once I got off the chart. Where did it push to? Once this 1 hour level right here is broken, you can go ahead and delete that one. This level no longer really is relevant, simply because on the 1 hour chart, once we go back to mark it up, we'll have a new lower high that created a new lower low. So we'll delete here, jump out to the 1 hour. I don't like the way this looks as far as definitely identified on 1 hour level. So we got this 4 hour level here. So yeah, this would have been a 4 hour level, and we're still waiting on the bottom side to set up. When I say set up, we're still looking for that bullish close to identify the high and identify the low. Right now, we're just pushing it to the low. So let that thing push on through to the Asian session. Based off of this, what I would have been looking for, this right here is when I got frustrated with the market. I saw this push. This is on the 21st. So this was Tuesday's night Asian session. What I saw was this push Pullback exhaustion right here, then it dropped again into London. And then in New York, what I did was I identified this level on a 1 hour level as a level to potentially take a short from. All right, so my trade was from here, and I had a stop right above this 4 hour candle. So looking at 24 pip stop. 24 pip stop. And what I was targeting was a new lower low. 24 pip stop based off this 1 hour level. Get up to 15-minute, opens up a little bit. I had a 24 pip stop. I was looking for price action to come, and it did kind of set up on a 15-minute for me. I had to outline something like this with the white box in the background. I got my bearish reaction. What I should have waited for was another break and a retest of this level to show me that that's where price action was going to short from. As you can see, where it really plays out to wait is you got that same idea slash price action setup right here. You have down here, you got your bearish close, looking for the break and the retest. The break, I mean, here's one break and retest, and here's another break and a retest. Right here, I just got the bearish close. I did not wait for the break and the retest, and price action pulled up. My stops were safe and secure, but I'll go back 15 minutes where I can show it to you best. What happened was, once price action pushed so far past my entry, I said, okay, we was in that heavy drawdown. We came down and we started closing bears. What I did was I moved my stops. And let's see, where did I move them to? It's like somewhere right here. I think it was on top of this candle. And I got stopped out. And I said, okay, well, I can understand that stop out simply because on a 1 hour time frame, we pushed down, we got a high, low, lower high, lower low. Price action impulsed into the highs and closed above this lower high. And what I did was when it came over here, impulsed into the highs, I took a new buy. And the buy pushed up, and as soon as I saw these candles formulating like this, I knew I was done. I knew that this right here was just a retest of that high, and now comes the drop to the downside. So I originally had this trade, and then if I left my stops where I originally had them, I've never had an issue. But because of how price action was playing out earlier within the week, the psychology was kind of funky because my levels, the same way I had this one set up over here, was looking for the short. It didn't play out, so I started moving the stop losses closer. I started trailing the stops in because price action started pushing in profit. So, yeah, I got clapped on that one. Then I got clapped on the buys I had going right up there, or something like this. Looking for to retest this high before it dropped again. Stops right under this candle here. And then once we start hitting the play button, you can see got smacked. This was during the NY session. It wasn't during the Asian session. So this trade idea was set up during the Asian session for the shorts. I adjusted the stops. Let me see. Go to the 15-minute. Yeah, I adjusted the stops. Shortly after this candle right here closed, I pulled it down. I can see it better on the 30 minutes, but I adjusted the stops. Then I got stopped out. I was like, okay. Like I said, I understand. We closed above structure, so potentially we're going bullish. So took the little buy during the NY session, thinking price action was going to go back bullish and touch that over there, and it didn't. Got clapped. Something like that. And then now back to the Asian session. Back to the Asian session. Price action had broke out of that 1 hour range we had marked up previously. We got a new lower low. We were looking for price action to create that new lower high to potentially short from. Got clapped, and then it ended up producing a new lower high. Just didn't wait long enough, and then it ended up going where I was looking for it to go to create that new lower low. And that's what it was. One thing I noticed over here was we did break the London low. We did close below that structure and create a new lower low. But what I also noticed is this price action right here closed above structure. And when price action started closing above certain levels, like this right over here, we closed above this 1 hour structure right over here. That could be a potential key sign that price action is getting ready to reverse and go back into the other direction. That's what made me take these buys right over here. Once these buys didn't happen, I was just sitting back and watching and waiting. I did not take, I don't think I caught any of this. These 15 minutes. Yeah, I don't think I caught any of this. What I did do was I sat back and watched and I saw how price action closed above structure. Again, 1 hour time frame. You can see it here. You got to push, pull back, push, pull back, push, pull back, push. Close above structure right here. So now I didn't see price close above structure twice on a 1 hour time frame. What I'm looking for now is, does this reaction right here close below this low, or does it come back and start pushing back higher? And the last trade I got pretty much for the week was that idea of price action not breaking this low, closing above structure, going back bullish. So when we got to the Asian session this time, oh yeah, your boy got active. Something serves. Something serves. I had ass positions open. First position was, based off the 15 minute, first position was the break of this little mid-level of the New York range. We closed above. So I had a position open from right there. I had like two positions open from right here, targeting these highs, I want to say. And then the other trade was from, and then these stops were down here. And then another position all the way down here, two more positions. And I was targeting somewhere way up there. Let's see. Yeah. Let's see. This is it right here. Yeah, because I had the first position from there, and then the second position from down here. What time frame is this? 15 minutes. Yeah, we're on 15 minutes. So yeah, second position from down here somewhere. First position targets got smacked, and then the second position targets was somewhere up here. I did not hold all the way up there. I closed out somewhere up here. But yeah, what I saw was price action closed above, structure right over here. Usually on AU, if we got the structure coming down, we hesitate at that level and continue bearish. We came down again, closed above structure again. So I was like, okay, well, this price action here closes below this London low, then I'll continue to look for the shorts. If it doesn't, I'm going bullish, potentially go back higher. And then close above, no exception. I don't usually trade that unless I have something set up from the Asian. We did not close below that London low. And then once I saw it coming, creating bullish structure, coming into that Asian session, I was ready to attack on some buys. Bought there, bought when it pulled back. I tried to catch the buy from way down here, but when I hit buy execute, it was from right over here. One of the things about this dynamic risk, because it is still kind of counter trend, but with the way the market was setting up, I was ready to take that buy from down at this level. Ultimately, because price action pushed impulsively this way, came back down, never broke these lows right over here. It was something I had in the back of my mind. So I started kind of identifying this as corrective price action, pulling back, push, pull back, push, pull back. And then, it's not really necessarily a push, it's real choppy. But ultimately, seeing that low, seeing this close above structure, seeing this close above structure gave me the confidence to take these buys. And then I just got active on him, and that thing took off. So this trade right over here, smack TPs, and then as it got up here, like I said, from these trades back over here, when it started consolidating, I was watching this trade all day. I wanted to let it run because I think I had a target like way up here somewhere. I think that's where it was. Let's see if we can see the zoomed out one. I don't think I did put a zoomed out one in. Yeah, TP was way up there at the top of those highs. So yeah, just right up in here somewhere. And yeah, started doing that consolidation shit again. Got up out of there. And there it is. I think I closed like somewhere right over here before I started doing all this. And that just comes with experience, just watching the charts over and over and over, being at the charts at the same time, and just knowing what to look out for. It was a pretty overall frustrating week. It felt like for me, for the most part, because I had certain things that I was looking for, certain things I was identifying, certain things I was expecting to happen. A lot of the things I did find that I was getting in kind of early. I repeat, I was getting in kind of early. So going into this next week, what I know I need to do is just, wait for the break in the retest, allow it to develop. Sometimes you do get where price action pulls into one of these zones and it do just take off on you. Well, it's coming back. You just got to be there for the comeback. And I know most of the time with me just trading the Asian session for the most part, I don't be there for the comeback and I always miss out on the trade. So that does affect my win and loss ratio a good bit because I know I usually only get one shot to get the trade idea correct and only one general attempt to get into the trade. And, if, you wrong, like you looking for some shorts and the market goes bullish and your ass is clapped for that session and then you off the chart. So that's pretty much it. I kind of took the month of June or the last end of May, going into June off from making any videos. I just, I needed a little break. And I mostly needed the break simply because I saw the market doing different things and throughout different times of when I trade. And I wasn't real confident in putting the videos out if I didn't know what the hell the market was getting ready to do. So, yeah, that's just part of the game. That's just part of learning different aspects of the market and seeing what the market is going to do. So, like I was saying, back down in here with this price action, see price action pulling back. Here's the retracement. How much of the structure does it really shift? You look at those levels on the daily. Those levels don't actually exist. Higher time frames always trump the lower time frames. The major pullback is into this level. When you're going down to your 4 hour time frames, these are potential areas where the market could react slash reverse from, but there's necessarily never a guarantee. Especially once price action comes down, close above structures, you just have to follow it. Watch it push, pull back, push and pull back. And if it gets to a point to like this move right here starts to close below your structure, then your potential pullback slash bullish run could be over. So that's just one way to view the market. Price pulls back until we got a little order block here. We came back, got a reaction. The reaction wasn't enough to shift the structure, start closing below the higher low that got you to that new higher high. Then potentially this bearish pullback or retracement is not about to happen. It's not about to take the market lower. So those are things I identified. And then this next push didn't even push to that next level on the 4 hour chart. Because like I said on the daily, those levels don't exist. So those are just places in the market, that you potentially get active from. And then if those levels hold and you let it run, if they don't, then you know how to do your little risk management, get the hell on up out and save your bread. That's pretty much all I got for this one. Like I did say, testing, 1, 2, 3, testing. I don't know how this is gonna sound. I don't know how it's gonna look. I don't know how it's gonna play back. Your brat was just testing. I'm gonna holler at y'all boys. I'm out. Big Budos, ENT in the building.